Welcome back to CIOs and Bowties. Greg Silverman, CIO, David Crook.
The bow tie, I guess. Yeah.
Interestingly enough, Dave, we get a huge amount of requests for you to be on our various publications. So you're doing a better job than I am, and you feature maybe a lower percentage. But anyway, be that as it may, it's been 11 years, believe it or not, since the last recession in the United States. I don't think recessions are, they're natural cyclical events. But as Ray Dalio points out in his commentary, of the 30s, we certainly know what happened in the late 30s as the outbreak of World War II.
Mm-hmm.
And so there's definitely conflicts around the world, there's undoubtedly conflicts around the world. So why don't you highlight some of those, and they may not necessarily quite a recent term, hot wars, they could be cold wars. So talk about that, and maybe we can explore some investment themes as well.
And there is interconnection as well between economic performance and geopolitical events, either the geopolitical events affecting economic performance or vice versa.
Right.
That was the case with Germany in the Second World War. Deep recession, Hitler came to power. So who knows where we go to from here. That being said, though, we certainly live in interesting times. And I'm going to start with the big daddy, China, world's second largest economy for the time being. Slowly developing a theory that perhaps China is not going to be the world's largest economy anytime soon or ever. But that being said, China and Hong Kong, the ongoing riots in Hong Kong, they're escalating. There have now been deaths. There weren't prior to that. And one would think that the Western world has to put their foot down insofar as they can with regard to China's behavior in Hong Kong. And if they don't, the consequences are dire. What of Taiwan if we let Hong Kong go into mainland China, or let the Chinese control Hong Kong just like it was another province of mainland China? Enormous problems there, enormous issues there. Issues, by the way, that President Xi clearly feels somewhat hamstrung by, because he can't deal with them in the manner that he can with the Uyghurs and everybody else within internal China.
Tiananmen Square disaster.
So Hong Kong's a big issue, folks, a big issue, and it's historically has been China's avenue to global trade more than any other. They're trying to do different things in the near term. But that being said, we also have an enormous conflict within the Middle East. This Sunni Shiite conflict, the Iranians versus the Saudis, or Sunni Saudis, Shiites the Iranians, also a problem that's not going away anytime soon, something the world has got to address. We still rely on shipping going through the Straits of Hormuz. For the time being we do, who knows when we won't, but we do. That being said, we also know that Iran are feeling the pains of US sanctions against them, certainly feeling the pain, so much so that they've raised the price of gas internally, caused lots and lots of unhappiness within Iran, so much so that they had to shut down the internet, and they have done so for over a week now. No internet in parts of Iran. These are not good things that are happening in the world. North Korea hasn't gone away. Certainly Japan has its issues with their neighbors and how they're going to start defending these issues, and the Philippines have their issues in the South China Sea, all sorts of issues all over the world, and they're dire. Syria hasn't gone away. Turkey's involved, Russia's involved, Iran's involved, Israel to the other side. These are complicated issues that are going to affect financial markets at some point or another. So how do we address them? Are we going back to gold again? Goodness gracious me. There we go. Yeah, we did cover that in the first segment.
Well, I think we're seeing increasing interest and offerings on the cybersecurity side. So they look typically more like venture capital type investments, software developments, but also hardware developments as well. So that's one area to play. The other area is aerospace and defense, and certainly I'm not advocating for that. People have their own views around that. But there's the whole. We're seeing investments for space exploration, right? And certainly the cybersecurity and space are considered the next frontiers, or battleground frontiers, if you will, because there is no, there are certain treaties about who can have satellites and where you can have your satellites, but I think it's kind of hard to police.
Right.
So that's the geopolitical tensions, and of course, that, as you say, they're all connected together in the sense that, folks, we're still at the tippy top highs in the stock market, right? Think about if things pull back a little. I'm not even predicting anything. I don't predict it. We're still at the tippy top.
Mm-hmm.
If things were to pull back, that it's just going to conflagrate and create volatility, which will bleed over. Excuse the pun, but it will just bleed over. To that end, I did print out this one chart, which I thought was very interesting. I'll just hold this up here. This is the Dow transports, and of course it's now back to front because of the camera. But if you notice that since 2018, the transports have effectively been in this wide range for 2 years. And a lot of indices are similar to that. Obviously, the NASDAQ has blasted through, and the S&P has slightly gone above its old highs, but I would say at this point it's slightly unremarkable. So, this is reflecting economic malaise, exactly as Ray Dalio is pointing out. And that's one to watch, because at some point, as you said, the markets will be impacted by what's going on.
Indeed, and I'm going to go off at a tangent in the second segment, which is going to be the last of these two segments, Greg, and that is something that is addressed by Ray Dalio of Bridgewater Securities, and that is Bridgewater Capital, beg your pardon, and that is this gap that is being created, and the wealth gap that is being created in Western society.
Yeah.
The US is no exception to that. In fact, the US might lead the way in that. A real problem. And once again, another of these unintended consequences of central bank policy. We had a risk-free rate of close to zero for a number of years post Yellen, and prior to that, Bernanke. And if your risk-free rate's close to zero, you're going to be forced as an investor to risk your assets. Right. So what's benefited? Equities. Right. Equities have run up for 11 years on the trot pretty much. Who's got wealthier? The wealthy. Certainly a lot of America are investing in 401k plans and have benefited from that. But by and large, those without capital have not benefited. Those with capital have benefited exponentially by this run-up in equity pricing.
Right.
Once again, another of these silly unintended consequences of central bank policy.
So capital assets have benefited to the detriment of labour.
Isn't that the truth? Absolutely. Yeah. Yep.
Okay, let's take another short break, and when we come back, part 3, CIOs and Bowties, discussing the Ray Dalio's article. Says the world is in a great sag and echoes the 1930s.